Want a second property with no deposit? In this video, we're going to show you how. I'm Andrew Timms.
And I'm Paul Hixon from Loan Market.
So the first point we want to cover, Paul, is equity. Can you explain how it works?
Yeah, sure. So equity is the difference between the value of your property and the debt that you have on the property. So for example, if you have a property worth $1 million and you owe $400,000, then you have equity of 600 grand. Now we can't quite use all of that because the bank needs some left in it, but there's plenty of equity in that example to be able to borrow some money. So then the next thing really, Andrew, is about the borrowing power, right? So how do we work out? Is it just that the rent covers the repayments?
No, it's not, Paul. So what the bank will take into consideration is your living expenses, your liabilities, and your income, as well as what rent you're going to get for the property.
And then how do they assess that? Do they just assess it as what's the repayments?
No, so banks have got an assessment rate and it came in a long time ago. It was increased to 3% above the actual interest rate that you're going to get. So if you're getting a 6% interest rate, the bank is assessing you at 9%. With most of the majors and second tier, third tier lenders, there are some banks who will have an assessment rate only 2% or even 1% above the actual rate that they give you, but their interest rates are much higher.
So there's some difference in borrowing power between the different lenders.
Absolutely.
And so they're really assessing that repayment as if it's significantly higher than it currently is. So that's going to actually really eat into your borrowing power at the start and how much you can afford.
The next point we want to talk about is rent, and different banks assess it in a different way. Paul, do you want to just explain that?
Yeah, so some banks will take more of the rent and some banks will take less. So there's some banks which will use 90% of the rent that receives, some will use 80, some will use 70. And that can affect the borrowing power across those different banks. And the reason they take different amounts is because they're allowing for vacancy rates, or they're allowing for agents fees, or they're allowing for body corporate fees, etc. in those amounts. And so obviously for some banks, they're just a little risk adverse. Okay, Andrew, the next important point, buyer's agents, property experts.
Yeah, very important if you're not an expert in property, to engage a buyer's agent or property expert so that they can find you a property with great value so that equity can build straight away.
Okay, so Andrew, I've got $100,000 cash deposit. I want to go and buy an investment property. I live in my own home and I'm going to stay in that home for a long time. What do I do? Am I going to use that cash?
It would be advisable not to use that cash, because if you're going to stay in that home for a long time, it's better to use that cash to pay off your home loan as quickly as possible, because there's no tax deductibility there. So what you would advisably do is look at using equity in your owner-occupied property. You can cash out equity, typically up to 80%, and use that as a deposit and for costs to purchase that investment property.
So using the cash to pay down my home loan. Pay down my home loan, all that savings that I've been doing, pay down my home loan, reduce that debt, and then borrow as much money as possible for the new purchase.
Correct.
Great. What are some of the costs as a landlord you would need to take into consideration?
There are around 4 types of costs that you would need to consider. First being property management fees. Ensure that you shop around and make sure you've got a good agent. The second is rates. Ensure that you're factoring those into calculations. The third is landlord insurance. Ensure that you are shopping around again, because that can vary and can be more expensive than typical home insurance. And then body corporate is the last fee that you would need to take into consideration, and this can vary between properties. So if you're in a property with lifts, with pools, the body corps can be more expensive.
Using equity to purchase the second property is really simple. Speak to a broker who can work out your borrowing power and give you some lending options.